I'd like to welcome everybody to the Chinchilla Pickin' Podcast. It is December the 2nd, 2022 at 6:43 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and as always, I am here with Brandon Beaver. Brandon, how are you doing tonight, man?
Good. I know I'm not supposed to talk about politics, but I forgot to mention this, and you can't barely see it. I forgot to mention this in the pre-show. I got this today. That's a real
Nice. Nice.
well speech to Congress, Ron Paul. All right.
All right. So, usually, guys, I would talk about the rules, and Brandon and I get together for the show. We have literally not said a word. Well, no, not I won't say not a word. We have not said anything about what we're going to talk about on the show. You're actually going to hear a live back and forth right now. I will say I'm a little head cold going on. Apparently, so does most of America right now. Everybody's got head colds. So my voice is a little hoarse and scratch, but we're gonna muster our way through it here. We're gonna step it up. I don't know. Mine's allergies. Mine might be allergies and just the congestion because it's just congestion. So I don't know. But my voice isn't being affected by it, so we'll muster our way through. We'll power through. Brandon, what's new with you, man? Let's do a minute of fluff.
Everybody's getting sick. RSV, first time it's ever been. It's been noticed in adults at this large of a scale. Laryngitis is going around as well. So yeah, everybody's sick. If you think that like you're just everybody around you is sick, it's because everybo's sick.
And with the new COVID relaxation rules by the CDC saying that you can go to work sick now, most companies are allowing you to come in sick as long as A, you do not have a fever, B, you do not come in contact with anyone with COVID, C, you do not have COVID or knowingly have COVID or have been tested for COVID. If as long as you don't fall into those categories, most people are letting you come to work. So people are showing up to work sick now.
Well, it's beyond that. Companies are now back to expecting you to come into work if you don't have sick time. So
almost back to the way it was. There's still some restrictions, but almost back. Anyways, busy day in the markets. Busy day this past week. I will talk about something that I mentioned, Brandon, since we didn't talk about what we're going to talk about beforehand. I am going to mention what I Blink charge in. I talked about adding it to my watch list last week, and then I did actually do a trade on it this week because it was on my watch list. But I'm going to let you take the floor because I know yesterday you said you had a bunch of stuff, so I know you had the meat of the show. So you go ahead, man.
I may have over exaggerated, but that's all right. Bull market, bear market, bull economy, bear economy. We have a white collar recession right now. So far, 2022, we have seen fewer job cuts than almost any year since 1993. And that's according to the recruiting firm Challenger, Gray, and Christmas.
Since we're going to go back to the early 90s, can we also pass pay as you go again? That was great. Yeah. Pay as you go was great. Let's do that. Clinton was amazing. I'll give President Clinton all the credit in the world for signing that bill and passing that into official office there. Pay as you go. Let's bring that back.
Yeah. So currently we have 10 million job openings with just over 6 million people actively searching for work. Jerome Powell in his speech said, for the near term, a moderation of labor demand growth will be required to restore balance to the labor market. So what happened today? We were expecting an increase of 200,000 jobs, and that was for November. We had an increase of 220,000. So it looks like the Fed's job is not done.
But now, Brandon, as someone who's outside looking in, why is the jobs going up and not a positive for the economy? Why is that not such a great thing? Why were you saying that the Fed's job's not done?
So let's balance this out a little bit. We really want sustainable growth in wages and in jobs for the economy. We don't want volatility. We don't want, big booms and big crashes, which, some say the Fed causes that by itself, but we want sustainable growth, right? So we're overheating a little bit. So the Fed's seeing this and they're seeing, this increase of prices. We're not going to bring prices down if wage growth doesn't temper itself, and if we don't temper the job growth across the United States with 3.7% unemployment.
So let me see if I'm oversimplifying this by saying that the Fed's job is to bring down inflation, right, and also take a look at unemployment. Those are two mandates: is inflation and unemployment. And for the Fed to bring down inflation, they need to make the economy slow down, meaning people spend less money. And by the Fed's way of making people spend less money is raising interest rates on borrowing and loans and credit cards and so on and so forth and houses. And until people stop spending and allow the economy to slow down, inflation is still going to continue. Is that what you're saying?
Yep.
Okay.
But I think there's a lot of people that just aren't looking for. I'm frozen here. Can you hear me?
Yeah, I can hear you. Go ahead.
Good. You can't see me because for some reason I'm frozen on Zoom. But anyways, I don't know if they're actually factoring in the gig economy to this, because have you tried to DoorDash recently? There's no shortage of DoorDashers. You never have a problem with finding a DoorDash. So I think a lot of people have just, went into the gig economy, and this is affecting, sort of the blue collar work a little bit more. The low, I hate calling it this because I really don't believe in this term, but the low skilled wage, like the retail, a lot of those people are DoorDashing now. And I think it's affecting the job market.
I think some retailers are still hiring and doing well. I recently picked up a second job because my daughter's getting older, moving out, and dad needs something to do, and I'm bored. And I picked up a second job. I work 2 days a week, and I picked up a retail place, and I didn't know if I was going to like it, if I was going to stick with it, but it's overstaffed. I'm not going to say what the retailer is, but and it could be just the culture. It could be the type of job, but some are overstaffed, man.
Maybe I could tell you this, though, from being in retail management and in retail for a very long time up until recently. I did not experience overstaffed situations. Consistently understaffed. I mean, since COVID. So, but anyways, the gross domestic product numbers, the GDP came in as well for last quarter. We had our first quarter of the year that showed growth, and it was an annual growth rate of 2.9% from July to September, and this was up from an estimate of 2.6%. So GDP is beating forecasts as well. Still,
look, I just want to say to that point of GDP, I go back to Janet Yellen's comments at the end of the summer of last year. And the reason why I keep going back to this, as this is what's causing a lot of this inflation, people need to keep it in mind when they think of, okay, what are we doing right now that could cause issues a year from now, and I need to place my money accordingly. And that's why I bring it up. Nothing else. There's no other purpose behind this. But she has said that to pay for everything that got passed last year, and she's on record saying this, that they need a GDP to stay above 5 for a continued period of time. And you could look up that quote, and GDP has not, ever since she said that, has not been above 5.
No,
it has dropped ever since.
It's very hard to get GDP above 5 in a developed country. And just to explain too why the gig economy would affect the unemployment numbers, you would think, if you don't know any better, you would think that would actually make unemployment rise, but it doesn't, because unemployment in the United States only tracks people who are actively searching for jobs. So if somebody's not actively searching for that, regular healthcare paying, benefit giving kind of job, then they're not counted in the unemployment report. So that could be making unemployment look, lower, because people are getting, their money other ways. Now, to show exactly that this economy is even further divided than what you would think, let's go through Kroeger's earnings, and we'll talk a little bit about what Costco said for their holiday season so far as well. Kroeger beat earnings per share. 88 cents came in on the EPS versus 82 cents expected. Revenue came in at 34.2 billion versus 33.96 billion. That was expected. Net income for Kroeger fell to 398 million or 55 cents a share, which is actually kind of surprising to me considering inflation is as high as it is. You would expect net income to be higher. But it fell from 483 million or 64 cents a share last year. So for the full year, Kroeger now anticipates that they will have adjusted net earnings in between $4.05 to $4.15 a share. It had previously expected between $3.95 and $4.05 a share. So quite the increase there in their guidance, which is what drove Kroeger higher and makes Kroeger, to me, with a price to earnings ratio of 14, still a good buy. Now, on the opposite end of this, Target and Kohl's have reported a noticeable pullback in spending, but Kroeger hasn't been the same. In part because cooking at home costs less than eating out, and because of what Kroeger calls and what people now call discount brands private label brands because they still want to sound fancy even though they're going cheap. Just call them discount brands.
Well,
I buy the discount brands. I don't care.
Yeah, I was about to say I'm gonna interrupt you there because I've bought discount brands many times. And I'm surprised at Kroger's numbers that they have that downside.
Yeah.
Because I believe that more people were shopping at Kroger. More people were going to grocery stores in order to get food, and less people were eating out. That was the storyline. That was the headline. That's what was going on. I mean, I'm surprised to see that. And Kroger's been raising their prices to come up with inflation, and the fact that they're not. Did you say they were not profitable?
No, they were. They absolutely
Okay.
were. Yeah, the profits were higher.
The profits were higher.
Yeah,
but was
it
the top line number that was lower?
Net revenue was lower. Yeah.
Net revenue. Okay, so top line number was lower, but the profits are higher. So they did raise prices in order to combat the inflation and keep their profits in. All right.
Yeah. So they did that, and that's kind of one of the things that might make you hit your head and think, why wouldn't revenue be higher as well? Because
you scratch at your head a lot. It's good.
Yeah. Well, so, but then you start to think about this, and we're going up against 2021 for sure. We were deeper in the pandemic. 2020, we were right in the middle of the pandemic. Everybody had to stay home, so nobody was really going out to like Texas Roadhouse or to Olive Garden or wherever you go out to eat. They were having to stay home and having to shop at Kroger. So the fact that net revenue was down, it doesn't really bug me that much, and it didn't bug investors either because the stock went higher on the quarter news. Whereas the CEO of Target, for example, and this is where you see the difference in the kind of shopping that people have in retail. The CEO of Target said that they've noticed a change in shopping behavior in the back half of October leading into November. And he said that consumers were working with their budget, shopping very carefully, looking for value, and recognizing that they've got to start with core staples before they spend dollars in discretionary categories. And that makes sense. And it makes sense as to why, maybe it makes sense as to why Target's not doing as well as Kroger. Everybody's got to go, grocery shopping. And then when you have the fuel rewards tied to, the shopping at your store, and people can then say, well, price of gas is still high, but it'll be cheaper if I shop at Kroger. That makes sense. And that's driving people to Kroger. And, that's why you say, but Target, we've talked about for the longest time that Target sales, apparel, and electronics, are a big part of their sales, and you just can't get rid of them right now.
So I looked at retail inventories month over month. This is looking at all retail companies' inventories, how they report, and it's by dollar amount. And the actual retail inventories month over month has actually gone down. So they are moving inventory, but they're not moving at a pace that they need to move it at. They still are stocked up on back inventory, which is why I assume that they ordered light on Halloween and heavy on Christmas, they were, or the holidays, if you will. They were hoping for a heavier, longer run of the holidays to kind of move things out with big deals, and they're seeing some of that online, but people are being picky and choosy about what it is. People are going to wait for bigger deals, and if they don't come, you're going to see you might see the top line be higher than last year, but that's just due to inflation. I don't think that you're actually going to see actual real bottom line growth if we don't see more deals in stores.
Yeah, probably not. And they got to figure out a way to get rid of that the inventory, and this holiday season has got to be it.
Which is why right now I don't trade retail. I've consistently said that all year long. I'm staying out of retail this year. It's not it's there's too many uncertainties, there's too many unknowns, and I don't like the sector. I just don't.
There's some winners I like. I like Kroeger and Walmart, even though
Is Kroeger retail?
I mean, yeah, they're technically retail.
I don't consider Kroger retail. Maybe you classify them as retail. I don't. They're grocery store, man.
Yeah,
we all need groceries. We're gonna buy groceries.
Walmart would be considered retail for sure.
Yes, Walmart's retail.
Now, further proof that we've got a bifurcated economy right now. Costco wholesale reported weaker than expected November sales. That took a hit on the stock because they reported up until Black Friday. They said there's a pullback in consumer spending. They said that sales for the 4 weeks ending in November 27th rose 5.7% from last year. That's pretty paltry considering normal Black Fridays. They went to $19.7 billion. For example, last year, or October's pace was 7.7% increase over the year before, and 10.1% increase in September. So, people were expecting a larger increase for the Black Friday sales than just 5.7% year over year. Now their earnings will come out on December 8th, and investors will be looking for $3.12 EPS per share on overall revenues of $53.92 billion. I do think that Costco being down 6% on those numbers was a bit of an overreaction, but I also still think that it's a little overvalued. So I'm still not touching Costco, even on that decline there.
Gotcha. I think Costco is always a good play, man. They have a good membership, and they have a good solid customers that are going to continue to come back in. And especially as long as they keep that hot dog at $1.50, you're going to get people buying the Costco membership program, man.
Well, I love their hot dogs, but yeah,
I think Costco continually goes up. They've continually gone up, and no matter recession, not recession, profitable business cycle, not profitable business cycle, they continue to grow and expand. I think personally, when I look at the company, I think the footprint needs to be bigger. I don't think they have a big enough footprint for cities. I look at like city of Cincinnati, they only have like 2, maybe 3 stores. They could probably build a 4th. And when you go to other cities, it's the same way as well. And they probably do that just to drive, make people want to get out there and get to it and drive that foot traffic, which is what they need. Yeah. So, would I buy Costco? No. Would I buy Kroger? Yes.
Yeah. I've got no video whatsoever now. So you're good. Pauses on this podcast, that's the reason me and Dave can't see each other. So, I can see you most of the time. I don't know what's going on here, but anyway, we'll move forward here. Yeah, Costco right now, if you're buying Costco at this price, you're paying 38 times earnings. I just think it's too expensive. All right, what do you got, Dave?
Yeah. Nice. Right back at me. All right, here we go, guys. So I want to talk about Blink. All right, Blink charging. So Blink Charging was down a ton. And I said, you know what? I was looking at it last week on the show, and I said, it's been down a ton. It's been down over 50%. I think it's a good price to buy. And I was watching it. And, I felt the market getting ready to make a turn and have a good upside couple days. So I went ahead and purchased in. I even had purchase in on my daughter's trust fund. Took some money out of her trust fund, purchasing on that. Quickly, it turned very quickly. I made a quick 5 to 6% return on my money. I was very happy with it, and I got out. That is what I mean when you say when I tell you guys on the show, add this to your watch list. I can't always get online to go ahead and post on StockTwits or Instagram saying, hey, we're buying this now. Go ahead and do it. But if I tell you to add to your watch list, it means I might be trading it that week. That's one I'm looking at. That's one I might be pulling the trigger on. I'm making a decision. Blink was one I was looking at and making a decision. Do I believe Blink is a good one to hold for a little bit longer? Sure, if you want to, right? I'm a day trader. I already have my long-term investment money already tied up in long-term investments. I don't have any more in my portfolio that because my portfolio is divided into percentages, right? So let's say I divide my portfolio into 30% of my portfolio is going to be long-term investments. I am at 100% of that 30%. I am maxed out on my long-term investments. So right now, what I'm looking at is staying within that mid-range and then the day trade. My day trade money is always free and available to go ahead and make purchases, or if I need to, dollar cost average my long-term investments. Right now, I don't need to dollar cost average my long-term investments, so I am day trading. Blink was one I was looking at. Tesla was one I was looking at a while ago at 215. I went on the show. I said, guys, it's dropping. I dollar cost averaged a little bit, but then it came back up. I'm holding, right? But I think it's going to drop some more. So I'm saving some money to dollar cost average it back down. It went all the way down to like 165, 170. I bought in around that mark. I can't remember exactly what I got in. And I came back on the show saying I bought in. I'm still not profitable, but I'm holding because I'm within that 5% range. So today it was in the mid 190s. I was right at my break-even point. Am I selling and getting out? No, I'm holding. I am still holding Tesla, but I am at the break-even point, so I'm not putting any more money in at this moment. I am going to wait to see if it goes higher. If it goes higher and I get my 5% good, I'm out. If it starts moving up and I'm profitable and I get the feeling that the market's going to take a turn for the worse, I will probably start withdrawing some money, take some profit off the table on Tesla. But Tesla is one I'm still holding. I didn't think I would be holding it as long as I have been. I'm now the third, fourth week of this trade. I would like to get out of this trade, but I want to also make some money. I don't want to waste my time and money in this. So I'm still in Tesla. We're going to keep in Tesla. Blink is still going to be on my watch list for this next week, right, guys? So that's one I'm watching. There's one that's on the Reddit meme trades, been all over, and it's one I've added to my watch list because I'm curious about this, right? And the one I'm talking about is HUDI, Hudai International Group. Hootie. This is right. Hooday. So this one is interesting because it has a very small float and it has a large big short interest on it. Now, the short interest is driving the stock down. Even after the huge run up by the Reddit team, and they ran it all the way up to $193 and change, came all the way back down to $10, which is where it should be rightfully priced. However, it's now down to $7.21 due to everybody shorting it, right? People have learned that when these Reddit guys run this price up, let's do some shorts, some puts, make some money on the way down. Well, now they push it down below where it should be valued. Am I buying this? Right now, no. And the reason is it's still too much in the headlines of Discord and Reddit, and I don't like it because I think they're going to keep pushing this down. At some point, it will be a steal, and you would want to buy it. But will it be a day trade? It might be a midterm trade, something I'm looking at for that midterm trade. That's one I'm looking at. One, guys, next week, what I'm going to try to do over this weekend is I'm going to try to get you some news on the fall of CrowdStrike. CrowdStrike as I just completely dropped out. I want some more information because I want to really delve into this and figure out why it's gone down, because this was seen as a very safe long-term investment. This was seen as something like you could put your money in and you could feel safe that it's not going anywhere. Why is CrowdStrike going down, especially with cybersecurity threats continuing to go up? That's one thing I'm going to look at. So the next podcast we have, guys, look for me to go in depth and in detail on CrowdStrike. Brandon, any thoughts or comments on everything I just covered? I know I covered a lot, so take your time.
I'm very interested in the CrowdStrike situation because it's a company that I actually like. It's a valuation that I don't like. Still.
Right? I understand that the earnings wasn't as good as they thought, but I just see a huge drop over the course of the since we talked about it on the show in the summertime, and it's just continued to go down. And I want to get in detail as to why is this going down when cybersecurity and is continuing to be a threat and companies are continuing to grow their cybersecurity defenses.
Yeah,
this should be a surefire play. I don't understand it. So
could still be a play. I don't like the valuation currently, but you might change my mind because I really like the company. So
right.
Yeah.
All right. So I mean, let's move on to the next one, guys. A couple little headlines I want to go into here. And again, this is what I do on this show. Brandon gives you the detailed research. What I do is I cover these headlines and then tell you what I'm thinking about after reading these articles. That way you get an idea of how I day trade. You get an idea how Brandon does his long-term investments by him going in detail on his research and his numbers and the fundamentals and the reasons why and what he's looking for. And he's very, very smart, guys. Listen to him on that. So what you're going to listen to now is, me talk about, hey, there's this headline here. Maybe I could do a day trade on it. One of the ones I want to talk about is United Airlines is nearing a deal with Boeing for a major 787 order. Now, I have come on here before with Airbus and Boeing, both after they've come out and said, hey, we got this great big huge order going on, and everything's going to look great in 3 years when we have all this profit going to be coming into our pipeline. It's going to be awesome. Every single time so far on the show, I don't know what's going on, Brandon, but those stocks drop. I talk about the deals and the stock. The last one I talked about is Boeing and the Apache helicopter aircraft deal with Poland, and the stock dropped. So when I look at this deal between United Airlines and Boeing, it's only 64 787 Dreamliners. Dreamliner, I've flown on them before. They are very nice, comfortable planes to fly on. But is this enough to go ahead and push the shares higher?
it didn't really
no.
get higher today, even off that,
I know exactly, and that's my point. Is I think there's still too many troubles in at Boeing as a company as a whole.
Yeah,
and we've go ahead.
Yeah, okay, so it did in 4% higher, but I mean, this is a travel company that's got, its feet in the defense sector. By all means, it should be higher this year. It's still down 7.29%. So yeah, outperforming the S&P 500, but when you consider the industries that it's in, so what? It should be doing much better.
I 100% agree. It should be doing much better. It's a sign of the trouble. So if you didn't already get in before today, you missed out on the 4% jump. I think that's all you're going to see off of this news. There's just too many troubles. They have problems with security at manufacturing plants in Italy. They have problems with defects in manufacturing plants in the United States. They have too many problems in their pipeline for this company to actually be successful off of deals like this, and that's the problem.
Yeah, if you wanted to play the defense sector, you could have played Lockheed Martin, which has been a favorite of mine since the start of the show, and it's up 50% for the year. If you're going to play the defense sector, that would have been, the company to play, not Boeing. But you could have a great product, which they've had some bad products, but
yeah, that's part of their problem. That's part of their problem, man.
It's unfortunate. You just, to see what would it used to be such a great American, company just run through the ground. Bad management could do a lot of bad things. And that's what you're seeing. I've made the same comparison. I was actually talking to my girlfriend though the other day, and I just want to say this real quick. You can even have good products, and if you don't have somebody that can manage the finances of it, if you don't have somebody that can manage the product itself, it's not going to go anywhere. Look, Little Debbie snack cakes almost went out of business and went into bankruptcy like 10 years ago. They're like the best thing ever. I love them. Who doesn't love the Christmas cakes? But they were almost gone before McKeeson Foods bought them up 10 years ago. But Boeing, the same thing. It used to be a great company, and you could be handed gold and flush it down the toilet, and that's kind of what this management team has done, and it's unfortunate.
Yep, exactly. And so going forward, guys, if you see headlines like this about Boeing, I just would still be careful. If you didn't already get in before the jump up off of the news like this, don't buy afterwards, because it's not right now. The company is not sustaining the gains they have off of news. So don't buy the news. You should be selling the news on Boeing, definitely 100%. Yeah. The last little headline I want to get into here, guys, before we give it back to Brandon or go into final thoughts, is the U.S. shale, right? U.S. shale drillers. So the U.S. oil shale drillers they came in during a time when the United States was importing oil, and the United States said, okay, you guys can go ahead and drill for U.S. shale. They finally got the approval. It was deemed safe. And so they went ahead and started doing it. And that the United States, because of the U.S. shale, became the world's largest producer of oil. Now, we kept a lot of that for our reserves. We just stopped importing oil because we were producing enough to meet our demands. We, in fact, started exporting at one point. So we for a very short period of time, became an exporter of oil due to the shale oil fields. Well, how the turntables turn, right? So the U.S. shale are no longer those oil fields that they went into and dug into are no longer producing at the same rate they were. The cost of actually drilling into more shale, new oil fields has jumped by 20%. And so this is really crimping the industry's ability to produce more. Research. I'm going to read a quote here. Research and engineering spending at top oil field firm Schlumberger, I just love saying that, this year dropped to 2.5% of revenue through September from 2.4% the same time a year ago. Drilling contractors, they've barely risen how much they're putting into investment into research and development. So this is not looking good for the industry as a whole, right? New oil projects, right? Analysts at Morgan Stanley said is modest at best, and the absolute level of investment is still historically low. That is a quote from Morgan Stanley. What does this mean for the United States? Well, this means that we are no longer going to be exporting oil. We are no longer going to be the largest producer of oil, and that we need to start looking at maybe finding better ways of importing oil. Does this mean that we need to find an end to the Russian development in Ukraine? Russia has come out publicly and said just today that they are willing to talk about an end to the conflict as long as their demands have been met. Yes, that's not a good thing to hear. Yeah, you got to meet my demands, but at least they're coming out saying they're willing now to talk. They're willing to talk. They're willing to talk peace, and that might be good for the world and the world oil as a whole, because Europe is really hurting, and we can't help them. We can only right now currently help ourselves and feed our own nations. Work on oil. This is a big issue, and we can't switch to electric just yet, because as more cars turned electric in California, the grid was failing, and they're telling people not to charge their cars. So we can't go one way, and we can't right now. We just can't go the other because of lack of licenses, permits, and the cost of drilling for new fields. We're stuck in a rock and a hard place here. Brandon, thoughts? I just covered a lot.
The whole thing was a mess, and it's still kind of a mess. And next year, the prices for oil would be much crazier, much higher, because Europe is going to burn through more oil, and the United States will burn through more oil. We're still missing all the barrels of oil that we had coming from Russia. no longer coming from Russia. Much like this show right now, it's a mess. I dropped my microphone a few minutes ago, so I heard that, and then we've been having the tech problems and everything, but whatever, we'll push through it. Yeah, it's good news. It's good news to hear that, maybe we can actually broker a peace deal. I like that, right?
Yeah, who doesn't?
Like that. Now, you want to sell your defense companies because that's the major reason why a lot of those have gone so far up the way that they have. But whatever, we'll have lower gas prices, and inflation will come down, and it's good news all around if that happens. So
I just say, here's my plays on all this oil news and the fact that the United States is no longer going to be able to export. The United States can't help Europe. If we are oil companies look good as a good buy going in next year. You wait for some more dip down. You wait for some more turn down before oil prices start going back up. So do you look at a Schlumberger? Maybe not. Do you look at a rig Transocean? Do you maybe not, or is he go with Chevron, Conoco, and Exxon, the big ones? One of the plays I would look at, especially if we could get the oil fields opened up in the United States, would be North Atlantic Tankers. That's a company that can ship oil from the United States to Europe, or natural gas from the United States to Europe. That's a company that you would want to keep on your watch list. And I believe the ticker symbol is NAT. I'm doing that off the top of my head. Do not quote me on that, but it's North Atlantic Tankers. Their CEO is hilarious to watch on TV. If you could watch some YouTubes of him, he's a jovial character. It's fun to watch, but I think he knows his product well because he's been doing it for so many years. He knows his product well and he enjoys it, and that's why he is so jovial. Brandon, that's all I got, man. Final thoughts, man, or do you have something else?
So far, it's a white collar recession. All the layoffs, most of them at least, are coming from the big tech companies that overreached during the pandemic and thought that somehow that unsustainable growth could be sustainable. So you're hearing a lot about layoffs in the news because it's the companies like Google and Apple, and even now Goldman Sachs announced that they're cutting bonuses for their executives this year and for their traders. And so a lot of the big players in the economy are getting cut and going unemployed. They probably won't be unemployed for very long, but they're probably going to have to take some lower paying jobs. Meanwhile, the retail sector and fast food can't find people. They just can't find people. And one of my explanations for that is the gig economy. But it is a white collar recession. Now let's see if the recession in the white collar jobs trickles down to the blue collar jobs. It's very possible. A lot of economists are saying that that's probably going to happen next year. I still think there's a good chance for a Santa Claus rally going into the end of this year. But we've dealt with the first demon of inflation. Now we're going to deal with the second demon of deflation if the Fed gets their way. So I wouldn't buy the rally. I would sell the rally.
100% agree. Sell the rally, sell the news. That's one of my key takeaways from today. Sell the rally, sell the news if you're in it. Take your profits when you can. I look for a downturn into the first quarter of next year as the economy as a whole, because hopefully people will start curbing their spending, and then we'll start seeing the unemployment number rise a little bit, and we can start curbing inflation because of that. Add to your watch list, North Atlantic Tankers. Tesla's still on my watch list. That's one that I'm still in. I'm looking to exit at a good point. I might exit as soon as I make a little bit of profit. I might not. It all depends how everything's looking at that time. Guys, one thing to look at, it's a company that I have a long-term investment in. During all these occasions of batteries catching fire and in cars and everywhere else, there is a company out there that is working on ways to go ahead and make batteries safer. And this company is finally, Brandon, after I've been investing in this company forever, they're finally going to be selling to consumers and selling to the broader market, to retailers, selling their products that everybody can use and other companies can use at a larger scale, and not just specified products. I don't know how much inventory they're going to have available to sell, but I'm so happy to hear the news that they're finally going to start making this a profitable company. Because when a company is researching and developing and they're doing prototypes and they're doing small projects, that's great. They're creating a great product, but eventually you got to start turning around and sell it, right? Eventually you got to start making that money. So Q1 of next year, they said they're going to go ahead and start selling and making money. And that company is KULR, KULR, and they make batteries safer. They don't, it's like the old BASF. We don't make a lot of things you use, but we make them safer. That's KULR. They don't make batteries, guys. They make batteries safer, all kinds of batteries. So take a look at them, see what you think, make your own judgment. You've heard how we analyze things on the show. Use that and determine whether or not that company is good for you or not. I'm excited to see that news, excited to see where it goes. That's all I got, man. What do you say we call it a night?
We could call it a night.
All right. So we thank you guys for listening. If you enjoy it, please hit the subscribe button. Hit follow us on all kinds of social media. We're gonna have Facebook here soon. But as always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.
Other